Hi everyone, I'm PK, and here I have Arpit Shah, who's a client of the Property Investment Accelerator. He's bought 4 properties over the last sort of 6, 7 months, tail end of 2023, and they've all done really well. And I've invited him onto this show today, and he's very kindly said yes to share with us his insights of like kind of where he bought, why he bought there, how he's bought being a full-time, like family man and worker. He's a business analyst, and just sort of give us lots of tips and tricks of how he's actually gone from only 1 property and to now 5 properties, 4 through the course. So I'm hoping and I'm sure there'll be so much gold in this session. And so thank you, Arpit, for making time.
Thank you, PK. Very grateful. Thank you for having me.
Welcome to the Oz Property Investment Mastery Podcast. My name's PK, and I help busy people build passive income by buying top 5% growth and cash flow property and build a portfolio using data without wasting months doing research, spending weekends at inspection or catching flights, or dropping $10,000 to $20,000 on buyer's agents every single time. So if you're confused, lack confidence, and just overwhelmed with all the information and marketing misinformation available online and don't know where to start, then this show is for you. I'm just going to go through your deals real quick. So the first one, just for context setting. So first one, regional Queensland, bought for 321. I'm just not going to go into the 300s. 321, 300, but 321, renting 450. That's really good. Next one again is in Queensland, bought for 468. Rent is 550, I think. The next one is bought in WA, just on the south side of Perth, bought for 564,000, renting 700, which is like, for a more higher price property, that's a pretty terrific yield. And then the last one back in Queensland, bought for 430. The valuation was actually terrific on that one, 484, but the rent is 550, which is great as well. So, I just wanted to say that because I think these results aren't typical of your everyday, run-of-the-mill, off-the-road investor. So I think first thing I should say, like I did before, is congratulations. You've done exceptionally well. And maybe we can start from the start. So what do you do for a living, and what brought you, or what kind of I don't know, is convince the right word? What convinced you to start becoming a property investor?
Yeah, it's good questions. I work in the business analysis space. I'm a manager, work in the IT projects delivery space. So property investment, like everyone, typical journey. I bought my first home, primary residence, upgraded that, had a little bit of equity. And then I'm like, yeah, I really need to start getting educated or learn a bit more about property investment. I've done other investments in the past where I've just made those investments with little research and just hoped that it would work out in my favor. But this time around, I followed your content and things like that, and it just really made me like, I've got some healthy equity and some savings and some borrowing capacity. Then let's make best use of it. Let's get educated. Let's try and do this in a more methodical way, rather than just a fluke. So that's how, for me, it was just like, starting following your content initially. And I kind of really resonated with what you were saying in a lot of aspects on a macro as well as micro level. And then that got me, more interested. And then, I had some time off, this time last year during the Christmas break. So I signed up for the course, did the course, and I started implementing them. That's how the first property kind of came about. I had a low risk appetite. I had heaps of borrowing capacity, but low risk appetite because I was still implementing the course for the first time. So hence I went with a low 300 kind of purchase for my first one.
Right. And do you have like family or friends like where you live that are property investors? Have they helped, or have they been an inspiration, or what's been the dynamic like that?
Not really. I think everybody is kind of different. And a lot of what I found in my journey is people are not really open about the type of investments and why they, unless you ask them. And what I was finding being in Melbourne is majority of the investments were happening in the developing suburbs. So like the Western Corridor and things like that, home and land packages, or just buying a land and construction. Having built my own primary residence, I know for a fact it's not easy to like go down the construction path. There's a lot of you tend to overcapitalize, and a lot of hidden costs, and you don't know whether you're gonna actually make money. Whereas then I bought my first home, existing property under market value. Again, not a lot of education, but still I managed to get that under market value with the way the market was, and bought in an established suburb. So I kind of somewhere believed that established homes and buying in a more developed suburb is the way to go. But I just didn't have the rest of the knowledge around that, which your course basically helped me. So I didn't listen to the advice that I was getting, which is like, invest in a developing suburb in southeast of Melbourne or western suburb of Melbourne, where the property is still affordable and there's a lot of demand. There is a lot of demand. People have made money, but I doubt their long-term kind of growth. I still prefer established suburbs and established pockets are the way to go when it comes to property investment. Yeah.
Right. That makes sense. And so, you said you'd bought under market your principal place of residence, which is fantastic. Why did you do the course? Like, what were like the things that you thought you really needed in order to be able to then utilize your borrowing capacity?
Yeah, I think what I was lacking is the fundamental knowledge and the structure around because the course actually goes through week by week different stages or different aspects of property investment. Whereas in if I was an everyday investor, I'll just be going and doing my research on real estate and domain and just really driving past the streets and where I want to buy. Like even when we bought our primary residence, we used to check out the Woolies and Coles in that area, and just see the type of crowd that's there. Whereas that's not so much relevant for investment. That's more if you're living in that suburb, it's probably more relevant in terms of the type of community that's there, and the people. Whereas in for property investment, it's more about the numbers. Like that much I knew that I want to invest, and I wanted I wanted to expand my horizon in terms of not just looking at the areas where I live or areas that I'm familiar with, and kind of look outside that and look beyond the state or the territory that I'm in. And that's when your course really kind of motivated or inspired me in terms of, yeah, you can actually be a borderless investor. You can actually invest interstate with some structured kind of content knowledge around how to go about that, how to research the location, how to go about doing the negotiation, and then finding the right asset for your property investment.
Right. So it sounds to me like you already had quite a like progressive mindset in terms of interstate investing and not having to just look in your backyard. You realized that investing principles work on other things as opposed to just how good is the Woolies or how good is the Coles. So, in terms of your first property, which was bought in Queensland, you're in Melbourne. Like, am I right in saying that you didn't have any inhibitions about like buying thousands of kilometers away? Like, how was that process for you? Or maybe a different way to ask it is like, maybe you were fine with it, but like, was your partner fine with it? Like, because this is a big thing to buy somewhere you've never seen.
Yeah, exactly. We were skeptical initially, and to our surprise, a lot of things people don't know. Like you get asked questions on Facebook group all the time. It's like, who's going to inspect my property? And they just like nobody knows that property managers would actually do that for you for free, like knowing that you're going to give them some business later on in terms of the rent roll. Like I didn't even know that rent roll was the actual business in terms of like that's the actual business. Real estate is not so much of the business, but the rent roll is the business. So there's a lot of that fundamental knowledge, or the kind of the lack of awareness that was there. But then once you get kind of educated, once you gain some knowledge on the subject, it became a lot clearer, and I was able to translate that to my wife. So if I would do a week of the course, and I was implementing at the same time as well. So I found that easier, going through the theoretical kind of part and then practically implementing at the same time. So that's why I picked the kind of, really, low budget where if something went wrong, like I was okay with that sort of a risk appetite. Like I had that much risk appetite. So see, like what can go wrong with a low 300 purchase, So I was in that sort of a mindset initially. But once the whole thing was done and once we secured the property and once we found the tenants, like we were just surprised because like, oh, 7% yield is actually achievable, in this sort of a market as well. So,
Right.
and, when we showed those results to others, like we started building in ourselves a bit more as well. Like, yeah, we know what we're doing. Like in terms of when you follow the process, you get the results pretty much. Yeah.
Right. Yeah, that makes sense. I mean, when you first invest, you are a little bit coy. You don't want to put all your eggs in one basket. I often ask, like what was great about that deal and things like that. But let me kind of ask a different question. Like, do you think you made mistakes in that first property purchase interstate? I mean, I know it was 7% yield, it's grown, but do you think in that process of buying or the purchase itself, was there any mistakes or anything you could have done better in hindsight?
I wouldn't say mistakes, but you obviously, learn, and every purchase that you do, it just makes you kind of more experienced as an investor as well. So, for example, if I'm doing my due diligence now, it's just a lot quicker as well. It was really time consuming. I was really nervous at that time, and I was pretty much overthinking a lot of things as well. Whereas in, it for me, it's now I realize that it's important to take meaningful action when the time is right, rather than just sitting on the knowledge that you've acquired and just that analysis paralysis more. So but knowledge kind of empowers you to be more confident, right?
Right.
So that's what happened in my case, where I was feeling confident, and it did take me a good 2 to 3 months to find the right asset as well. So it did take more time than it did for my third or the fourth purchase, for example. Like it was a lot quicker process because I've got a hang of how to go about doing the due diligence, how to negotiate quickly, how to get a deal under contract as soon as possible, that kind of stuff.
Right. I just want to pick up on that thing you said or you mentioned around overthinking, because I think that's obviously like a chronic thing that everyone faces, especially investors, because we're putting down hundreds of thousands of dollars. Like, I don't mean to put you on the spot or anything, but are you able to like perhaps break down what aspects of the process or the property or perhaps your own self-confidence that you were overthinking? Like in hindsight, what are the things that you would tell yourself like, hey, Arpit, I just wasted time thinking about these three things and it's like that was a waste of time.
So I think first one, it's the location selection. So at a given point of time, there are multiple markets to worth investing in, and nobody's got a crystal ball, so we can't really see or predict which market is going to perform better than the other. And I was overthinking whether should I stick to a capital city, or is it okay to invest in regional Queensland that I haven't been there before, I don't know about, and that kind of stuff. So that was one part that I was really overthinking, and I was looking at kind of multiple suburbs and multiple different markets, and it was really stressing me out in terms of, oh yeah, there's one property here, but there's also another property there, and I think that was one thing, location selection. And then the other thing was, let's just like trusting the process initially, or trusting the agent or the property managers, because they're based locally over there. So for example, I was dealing with sales agent. They told me, yeah, there's multi-offer scenario. I was having a hard time believing them that there are actually multiple offers,
Yeah.
on the same property. So it's those kind of things. It's just like, trusting who you talk to, and just kind of in the process. And the third thing is just, overthinking, just the overall kind of about executing, and just sticking to your plan, just doubting kind of yourself and the goal that you kind of set for yourself. So for example, I had goal for buying 2 properties. I was just kind of doubting myself, should I just go for one property which is 500 600K, rather than sticking to my goal, which is like 2 properties of 300 400K.
That's really useful. Yeah, that's it's really good that you share that, because I think people do overthink, but unless you kind of crystallize exactly what you're overthinking and why, it's kind of hard to overcome it. Like that first thing you mentioned in terms of suburbs, there's this better than I do now, but there's 15,000 suburbs, and if you're using data to, let's say you've shortlisted your top 5 or 10, like you said, no one knows exactly whether suburb number 2 will perform better than suburb number 6 or 8 versus 1. These
Yeah.
are the top 10 in 15,000. I mean, this is your all-star
Yes.
team anyway.
Yeah.
So I think it's like suburb selection is incredibly important, but you do have to draw a line in the sand. And I think some people also think that there's only like the data must point to just one suburb. And
Hmm.
that's also not the case. Like
Not the
you
case.
don't do the course or you don't become educated or you don't do engage a buyer's agent just because you want to know what that secret suburb is. There is no mythical, amazing, the
Hotspot.
one,
Yeah.
the chosen one. There are many that are better than many others, and you just need to be in that sort of top 5%.
Yeah. Yeah, so I think, yeah, that's the part where, that's why I come back to, it's more important to take meaningful actions than to just like, sit on the knowledge or keep spinning wheels in terms of, just the knowledge that you've acquired and just kind of doubting the course that you've done or the book that you've read. I think it's just, the best kind of experience that you will get is by taking action and by making mistakes sometimes. And they're minor. It's okay to make minor mistakes as long as you're able to kind of rectify them or learn from them. Because, like, to be honest, nobody's going to stop with just one property investment. Chances are you would go again, and this game is addictive. That's what I'm finding, that
Yeah.
you'll go again and again. So like, I definitely see myself a lot more confident now, as I said, with my due diligence, with my negotiation, and just and so it's a different ball game now compared to when I just did the course and I was just executing that for the first time. So yeah.
Got it. That's good to know. It's good to hear. I wanna ask you about intra-suburb research.
Yeah.
And I should also say for anyone who's watching, like I haven't sent these questions to Arpit before, so I am kind of putting him on
You
the
should
spot.
have.
We talked about suburb selection.
Yeah.
The next suburb you chose on the south side of Perth. It's a suburb that has, and for people in the know, you can kind of guess what it is. It
Yeah.
has houses that are on the waterfront, really nice, $1 million, I would say, houses, really nice houses. And then you go like 500 meters or a kilometer inland, and you got a little bit more socioeconomic areas for sub 500, 600. And in the middle, you've got the middle rung. So suburb selection is great. You've done suburb selection, but is there any pointers? Or maybe I switch the question and ask, like, how did you go about saying, okay, I can't buy the suburb, I can only buy one property on one street. How do I narrow down on that street? Of course, in the course, there's like another 30, 35 factors, but maybe just like in your experience, how you did it?
Yeah, so to me, I kept it really simple. So when I'm targeting a particular location or a suburb, I do kind of cast my net wide in terms of I just don't limit myself to one or two streets in that particular suburb. Otherwise, I'd be waiting a long time to buy properties. But yeah, one thing that I've always had in mind is I wanted to be close to that, those $1 million suburbs. Like I didn't want to be too far away from those $1 million suburbs, sorry, properties in that particular suburb. So I wanted to be closer to the estuary or, closer to the water, where that's where the properties are really expensive. So that's one of the intra-suburb factor that I had. Plus, getting more feedback in terms of, okay, what's the kind of locality? Are they more owner occupiers on the street? And that's basically another thing that, I really focused on. If there's a lot of owner occupiers, and in this case, it was like 80 or 90% owner occupiers. I felt like, yeah, that's a good pocket to be in. Because even in the long term, it may be that the next person who would like to buy or rent this property would want to be in a locality or in a pocket where there's surrounded by nice houses where they keep their front yard maintained and that kind of stuff. Yeah.
Yeah, no, 100%. They're always trying to anticipate what the next buyer will want. And
Hmm.
if they have a question mark about something, I mean, if you have a question mark about something, then they'll have a question mark about that same thing, and it might put them off. I always get questions like, oh, there's like a power line a little bit in front of the house, or there's, ugly sort of power box, that green power box. Should I go for this property or not? And it's really, well, if you're thinking about it, then other people will think about it. And so you got to think with that kind of end client or end user in sense, in a way. Perth has always been really difficult to buy in over the last 2.5, maybe even 3 years. I remember at the end of 2021, people were saying it's impossible to buy in Perth. I remember in 2022, people saying it's impossible to buy in Perth. 2023, impossible. Now it's 2024. still impossible. What was like practically, what was your technique, or what was your method for buying this property? Because it's in a very hot suburb and you got it
Yeah.
at a terrific price, and it's renting for 700, bought for 564. So in terms of maybe negotiation or valuation, or how you got it inspected, is there anything that you can share for the benefit of others?
Yeah, like it's funny when you say that because I came on the mentorship kind of call back in June, and at that time, I had the two properties which I bought in regional Queensland,
Mm-hmm.
and this was like one of the conversations we had at that time was, why not Perth? And I was like, I did try, but I
Yeah,
couldn't buy
yeah,
in Perth. But
yeah.
I always knew that I wanted to have one property in Perth, so I went down the SMSF path to get additional borrowing capacity because
Mm-hmm.
I knew that I couldn't, find the property that I wanted to buy, like around that 350, 400, 450 kind of mark. Like I had to increase my budget. So I basically waited and, set up my super and then, bought my property in that structure. In terms of the, the actual, like how I came across that deal is just literally by, um, it's just, you have to keep on trying. Like you can't just be like, you just pick your finger on one property and yeah, that's your property, unless you're prepared to offer, way above kind of market value or asking price. So for me, which is like, just constantly building rapport with the agents, keep on kind of building that relationship where I started getting more and more access to the pre-market and off-market kind of deals. So this was a pre-market. This was ready to hit the market, owner-occupied property, very similar to my last purchase that I made as well. I find that this is really kind of, it really worked in my favor because it was owner occupied. Owner didn't want, open homes and people coming through and then having to, stage or, clean the house or prepare for the open homes. So they were happy with a reasonable offer. If that came through to sell it pre-market. And that means I'm competing with less buyers as well. I was competing with maybe another buyer or another one or two buyers. So I increased my offer a little bit. But if that property would have gone on market, it would have gone at least 20, 30K over the price that I paid. So
Yeah.
that's the thing, like if you want to avoid the competition, then better to get it kind of pre-market or off-market. That's one thing, kind of it's a lesson learned where in a hot market that if you wait for it to go on market, like chances are it's already too late, that
Yeah.
somebody could just come in and I participate in like, open offer, which is essentially like virtual auction that happens in Perth these days for a lot of properties, especially in that area. And I was seeing there's like 20 buyers bidding for the same property, and it's just like, crazy. So I didn't want to be kind of, competing with those sort of buyers. Like, so yeah, I gave myself kind of best chance in finding something kind of pre-market.
Nice, nice. And I think people think that there's like an immense amount of FOMO in Perth right now, or that the entire East Coast is buying in the West Coast, and that's why there's like this intense competition. I mean, the reality is it's more to do with the supply side, and you realize this when you start buying. There's just like almost nothing for
No
sales.
stock. Yeah, yeah, yeah.
So it's like even if there's a normal amount of buyers, if there's like much less property for sale, it just
Yeah.
doesn't work, and that's why prices are rising. I just want to ask like a bit of a practical question that I hope will help everyone that is watching or listening. You got that property pre-market. Like how did you build that relationship with the agent? Like, could you walk us through it? Like, did you send a gift, or did you
No.
just do a few phone calls? I'm being facetious
Yeah.
here, but like did you make a few phone calls, and like just walk us through it just so people can be like, okay, I could do that, myself.
Yeah. I mean, it's just showing that you're a genuine buyer. I mean, you may not get it the first time. So, in my case, I actually, lost a deal with a particular agent, and that maybe that's what it takes, losing a deal or two, but still putting in an offer and then showing that you're a genuine buyer. It just shows that that they kind of that you're taking interest and that you are genuine and you're wanting something as well. And so it's kind of that sort of a relationship where, yeah, because they're getting multiple phone calls as well. So how are you going to stand out? I don't think there's kind of a secret to that recipe. if I knew it, like I would, yeah, I would definitely share that. But there's no secret to that. It's just being right place at the right times with these things, you know. So, I mean, the best thing you can do is just give yourself multiple opportunities, multiple chances, and you know, don't be afraid. Like I would have put in offers for more than like 15 properties in Perth, you know,
Mhm.
before securing the one property that I got. So it's not like yeah, I think a lot of people go through that as well, and sometimes that's what it takes. So it's very important that, you know, even if you, like, let's say you're not the buyer secure the property, still maintain that relationship, because you never know, you may need to come around and, you know, buy a property with the same agent again. So
Yeah, yeah.
it's
I
just
mean,
personal relationship. Yeah.
right, right. I've really found that the property market has changed since maybe like 10 years ago. Like now it's so tight with such a chronic shortage that, I mean, 10 years ago, if you put in 2 or 3 offers, you're guaranteed to be successful in at least
Yeah.
one of them. These days, it's like you have to expect to put down at least 5 to 10 offers to be successful. And I think that's the mindset that people need to have going into property investing. Almost, you know, just be really unemotional about it. Miss out the first one, second one, third one, fourth one, fifth one, fine. Just keep going and create like a system around it so you don't get taxed and stressed out and all this stuff every single time.
Yeah.
Okay, so you got 4 properties, Arpit. Like what's your eh, practical or like feasible or like realistic goal in the next I don't know, like 10, 20 years? You know, borrowing capacity isn't unlimited for anyone. You know, everyone has a cap.
Yeah.
How are you looking to achieve your long-term passive income goals, presumably in the next 10 to 20 years?
So, I mean, one thing, you know, I'm really grateful for the course is more than the knowledge to acquire properties, it's kind of taught this life skills almost, and given me like this new passion for properties. So I've started doing some more property consulting on the side. I'm starting to help, you know, family and friends. That's kind of one way that I'm keeping kind of in touch with the markets as well, and then kind of helping others kind of do what I've done. And then, you know, the other thing is the utilizing the skills. So for example, I do have data analysis skills, right? So in terms of my day-to-day work, I look at spreadsheets and data. So I like to do that. And then early part in my career, like I was doing call center, like I was doing cold calling. So that's another thing which I'm like, I'm not afraid to pick up the phone and, you know, talk to the agents and things like that. So I want to continue to do that. So in terms of my kind of next step, I want to continue to, you know, help others build their property portfolio, you know, high performing property investments that they can have in their portfolio. That's kind of my near term goal. And then, you know, once the interest rate starts to come down, you know, I'll have access to more borrowing capacity as well. So we'll continue to, you know, keep buying properties. And then, you know, eventually look at maybe commercial or some other asset type, and, you know, subdivision, property development, you know, learn about kind of those aspects. That's
Mhm.
another thing what I like about you know, this whole thing is like you can be active or passive with property investment. You can be just, you know, passive. You can just rent a property out, low vacancy period. It will be on autopilot. You don't have to worry about it. But, you know, when you've got time and energy and, you know, you want to put in some effort, add in some value, do a renovation, add a granny flat, you know, look at the rezoning or subdivision capability, do a feasibility on those sort of things. So that's another thing which I found really interesting. So that's one thing which is kind of keeping me kind of really on my toes all the time. I'm checking my portfolio, you know, whoever I help, just to see, okay, what other possibilities are out there, you know,
Yeah.
in terms of tapping that additional borrowing capacity or additional income from the property that you have. Yeah.
Nice, nice, nice. Well, I mean, it's good that you're monetizing your old skills and newfound skills as well. Because yeah, like in times like this, where relatively speaking, interest rates are higher than they used to be a few years ago, then income increases are the best thing to keep buying property. So it's good. It's you know, you're obviously a family man, you've got a young family, and that balance is key. But I think keeping the goals quite clear
Yeah.
is very important. No, I'm really grateful for your time. Is there like one parting message or piece of advice that you can give to anyone just to help them take the next step in their journey?
First thing is like, you know, get educated, you know, if you don't have the knowledge, acquire the knowledge. But once you have the knowledge, it's about taking meaningful actions. So I'll keep coming back to that. It's very important to, take actions and, do something. Don't just sit on the boring capacity, buy something and, do yourself a favor, do your family a favor, build generational wealth, build passive income. There's so much scope. We're in a really, I think we've got a great opportunity. We live in a really good country where the economy is so good, where it's really a blue chip asset. It's a no-brainer to me. Like now that I understand
Yeah.
a lot more about, like, it's just no-brainer to invest in Australian housing.
Yeah.
Yeah.
I'm, like when I say it or other people say it, but we're professionals. We have a product to sell or a service to sell. It can seem like has an agenda, but when you actually start investing in real estate, you see what it does. You see the risk profile, then you start to believe it for yourself that actually this is,
Yeah.
like never say never, but
Yeah.
this is as blue chip as it comes. You know.
Exactly. Yeah.
So,
Yeah. I think there's nothing that can compare, like not even close to, like not shares, not crypto, nothing.
No, awesome. Well, thank you so much for your time, Arpit. And I have to say, like always, from all clients, I love it. Almost every day I get an email to say, I bought this, I bought that. But I really love it, especially when clients scale. And from you, I keep getting these emails on the Facebook Messenger or via the mentorship email. And I was like, it's always a pleasure to receive them. So from my perspective, a hearted congratulations, and I'm very proud of your achievement. And of course, it kind of brings me a lot of joy as well when clients go on and share their skills with others, which is what you're doing as well. So thank you very much.
Thank you, PK. And yeah, looking forward to bigger and better 2024.
Yeah, let's bring it on. Thank you, Arpit, and thank you everyone as well for listening. There's actually like more than 100 of these like client interviews and a client's results playlist on YouTube. Whether or not you want to do the course, I really encourage you to go and watch them, because even without the course, you'll learn so much by just hearing from my clients, because they've done terrifically well for them. More than 100 interviews, which is like days worth of watching. So enjoy that. Hit the subscribe button, hit the like button, and once again, very grateful. Thank you, Arpit.
Thanks, PK.